Hello there, hope you're all doing well. Welcome back to another lecture video. Today I'm going to be doing a trade breakdown and explaining essentially how you can trade continuation trades when you clearly see the market is being delivered in a one-sided manner. So that means if price is heavily bearish and we can see the right side of the curve is about to unfold, we want to align ourselves with that regardless of if we're at the very high or if we're trying to catch that continuation, because every single retracement is just a fractal market maker sell model. So that's what I want to show today, is how you can use a lower time frame, such as for example the 15-second, which I used to get in on the market move and see how smart money is aligning themselves and where they essentially enter with their orders. So I'm now going to show you guys the execution video and we'll continue with the lecture after that. So enjoy. Now that you've seen the execution, you will know that I was heavily bearish on this and I was very confident in my draw on liquidity for the day. Now, what exactly was my draw on liquidity? I want you to pay attention right here. I had annotated the 7th of August low right here. Now, why was this low of interest to me? Well, first of all, as you can see, we're clearly forming our right side of this market maker sell model, and I can see that this daily low formed inside of this imbalance and it's looking like a very nice target for price to eventually go down to here. And what confirms to me that IPTA is now looking to take out this low and engineer more liquidity is the fact that price stopped right here. Do you see how at the open at midnight, price does not come down and take out this low? Instead, we go higher. So for the day, we manipulate higher. And this is the same thing that happened earlier in this week, where we had a midnight open high into a point of interest, being the weekly open, and price dropping heavily lower. So same exact thing happened 2 days in a row, on Tuesday and on Wednesday. And I shorted both. Now the reason I could short both, the liquidity was perfect. For price to be allowed to take out a certain sell side liquidity or buy side liquidity, it must first engineer those highs and lows so that we're trapping essentially buyers and sellers, so that when price comes down and takes those lows, for example, smart money will have enough to fill their own orders. You have to realize that these markets are not designed for us, okay? They are designed for the bigger players to be allowed to enter and to have enough liquidity to be able to enter the markets with thousands of contracts. They don't care about our small 3 mini contracts or whatever. Even though that might seem like a decent size, to them it's nothing. So we have to view price this way. We're literally seeing how these time cycle highs and lows on specific days are being engineered so that price can eventually reach its target and have enough liquidity to allow smart money to enter. So what I was seeing here on this day was price opened high, like I said, into this imbalance right here. This imbalance was the first imbalance that took out this intermediate swing low right here. So that's why I was monitoring that. We see price perfectly rejected here with these now relatively equal lows. Engineered liquidity down here was very obvious. And I saw that, in fact, this was at 7 o'clock. I came to the charts around 9 o'clock. So to me, I knew we can already have the manipulation. It can already be in. So I need to be quick, and that's why on that day, I was looking for a 15-second fractal sell model that I could get in on. And what I'm looking for is essentially the signatures and the traces that smart money leave behind. When they enter, there's always specific things that I'm looking for that shows to me essentially their footprints. They're leaving these traces, these breadcrumbs inside of price action. And when you learn to recognize these things, your trading will just change forever. Because you're not trading for yourself, you're trading to align yourself with what the bigger players are doing. That's why we care about this smart money reversal, right? That's why it's called that. So we need to align ourselves with them. So knowing we have a point of interest here, price has reached it, rejected at 7 o'clock. I clearly have my sell side. I'm going to go down on the lower time frames and look for a potential entry here and see what market open wants to do. Also, some of you may have seen that after we took this target, I decided to hold on to a runner. And where did I take that final partial? Right here. This imbalance that I spotted on the hourly chart, I was thinking, okay, since price is heavily going through this, I'm going to monitor this and I'm going to take my final position off at this imbalance right here. So on the 1 minute chart, as you can see right here, these lines represent our time cycles, as you can see, and we had 90-minute SMT and 30-minute SMT with ES at the highs. So I knew that at 9:30 right here, price was already primed to go lower. The manipulation, like I said, had already taken place. So I'm trying to align myself as quickly as possible because I see that my target is just down here. And so I'm waiting for price to finish with the initial drop and then catch a potential retracement here. Because price will always do a slight retracement, at least into 50% of that initial expansion. This happens quite often, and on the lower time frame, this is a sell model. On the 1 minute, it might look like it's just a bunch of candles together right here and there isn't much going on. But this is where the 15-second comes in. So on the 15-second chart, like I said, I'm looking for that fractal market maker sell model. And you can see I had to monitor the time cycle highs and lows again. This is something I've talked about before, where I'm monitoring old time cycle highs and lows so that I can see exactly where price is rejecting and how it treats those old highs and lows. So here we have this old 30-minute cycle low between 8:30 and 9 o'clock. This low on the 15-second right here is the low of that time cycle. So I draw that out and I look how price is treating that once we retrace higher. So as you can see, price goes higher into that time cycle low, rejects it. Perfect. That's what I want to see. So I'm seeing that and I need further confirmation for me to enter on such a small time frame. So I have this rejection. Of course, it reached into this series of imbalances as well. And I see now price is starting to displace this imbalance. As you know, we want to see the bullish PDRAs get disrespected if we are bearish and so on. So here I'm looking for that final confirmation with the inversion. And I see that price right here closes below it right here, retraces into it, and we see that rejection happen again. Price cannot close back above this array. That's very key. And we see that price is slowing down inside of here. I enter. And I know for a fact, because price is slowing down inside of this array, no longer has the strength to push above it, that smart money is priming their orders. They're essentially firing in shorts, getting ready for price to just deliver lower towards those targets. And so this is what I mean. We need to see these signatures, with one of them being the fact that once price has reached a key area and we anticipate a reversal, if it starts slowing down, then you see the rejection. It cannot close back above this array again. This is a very small and subtle sign that now we're going to see that expansion happen, and it's going to be quick. So me entering inside of here, I already know that I'm aligning myself perfectly, and that drop is going to come. Of course, it's going to go straight into that first target right here, which was that 7th of August low, and then finally down into that imbalance that I had. So the trade itself can look something like this, where you enter inside of here, and your stop should be above this high, which rejected the very edge of that previous cycle low. So you know that this high should not be taken now because price is in a rush. When do we confirm that this high shouldn't be taken? Once price is displaced below this imbalance right here, and we see clearly the rejection. Look at this 935.15 candle. Pushes up a bit higher, cannot close above, rejects. Price stops and hovers inside of that imbalance, short, short, short. That's all that's going on here. Now, once you see that the initial high has been respected, and you see price pushing below this imbalance again, retrace into it, I know for a fact that I can easily put my stop right here. So the first initial stop can be up above here, but then I see the rejection, and I can be so confident in the fact that this is now going to function as a rejection block, because the rejection block is what rejected this imbalance. Okay, this is the one that could not close above the imbalance. It shows to us clear rejection, and you see how price used it here. Could only go to what? 50% of this wick. That's another small, tiny detail, but it's very key to monitor. And once you see that, yeah, rejection blocks just unlock a whole different perspective on your trading. And at this point, price goes lower, and I see right here, price pushes up a bit higher, and I write out, don't be afraid, because obviously I know this is just a retracement. Price is not going to reverse from here. It's simply just a retracement. And what does it retrace into? The 10-minute cycle low, rejects it, boom, drops lower. Exactly what we want to see here at 940. So you can see your price delivered beautifully, just going down. So this is more of a continuation type of trade, but you can see that on the 15-second chart, it's all the same. And I'm looking for exactly what's going on here. This rejection, the small details, the rejection block, inversion, price slowing down inside of here, fulfilling the orders, and just dropping straight through. When you're aligned on the higher time frame, every single retracement on the lower time frame should be another opportunity for you. Because the markets were so bearish that all we could look for was sells. There was nothing that could initiate a buy until we have reached the targets that price were locked onto. So I hope you found this video insightful and that you got some new insights into what I was thinking right here. So with that being said, I want to thank you for watching. I will see you in the next one.